All right, what is up, traders? What's up, tycoons? Super excited for today's video. People aren't explaining the yield curve correctly to you, all right? And that's why I'm making this video. I think that people just, don't necessarily know what they're talking about all the time. So we're going to show you guys the current relationship between the yield curve. Now, there's actually two yield curves, right? The first one we're looking at is the 10-year, 2-year, right? We've got that on top with the stock market here on the bottom via the SPX S&P 500 index. Then we'll zoom out and take a look at a 10-year, 3-month yield curve. Those are the two most important yield curves that you want to pay attention to. All right, we'll break down the relationship between those and stocks. We'll take a look at what actually happens when they uninvert, why that's something that you really want to pay attention to, right? And then we'll go over and show the current relationship and how the yield curve is impacting stock market prices today. So it's going to be a really great one. There's a huge warning sign that you need to be ready for whenever this happens, and we'll cover that in today's video as well. Be sure to smash the like button, subscribe to the channel if you're new. As always, though, the content provided on this channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter, right? Giving out free valuable finance content, free trading content, and I even try to sprinkle in 1 to 2 free trade ideas a week. This is what the trade ideas will look like, highlighting the conditions on the chart, whether it's a pattern, a moving average, an indicator, oscillator, something like that. Right, show you guys the actual chart itself. And if you take a look, many of the previous trade ideas from the newsletter have worked out very, very well. This is because I choose high quality setups rather than trying to just spam your inbox with 5 to 10 different trade ideas every single day just to brag about 1 or 2 that actually worked. Okay, so the whole goal is to identify high quality setups for you guys and teach you, in the newsletter, how you guys can potentially find these high quality setups yourself. Now, one of the most recent ones was RTX. You can see members in the Discord hitting me up saying, hey, my January call options are up over 88%. They actually went up much higher than that, over 130%. So that was a great trade from the newsletter. PayPal was the most recent one. PayPal has had an absolute enormous green 3 days in a row, really profitable on options trading there as well. So sign up for that, guys. It's completely free, and you can always unsubscribe if you want to. Right now, to get access to all the different trade ideas and analysis, it's normally $10, but to start off the new year, I'm only giving it away for $1 right now, right? Not looking to charge you guys an arm and a leg just to get trade ideas or look at, be able to look at what stocks that I'm looking at. So you can get in for just $1 using promo code JAN24. Carnival Cruise Lines was one of the most successful trades last year. All right, that one ended up going up over 850% at one point, and that trade, unfortunately, was not a part of the newsletter, right? It's one of those trades that was for Discord members only in the analysis, of the Discord as well. So not only do you get that, but you also get access to other valuable resources, custom scripts, indicators, being able to look at gamma levels for a stock or dark pool levels for a stock. There's lots of valuable resources that I'm sure you guys will enjoy. Now, enough of that. Let's get into the video and head on over to Think or Swim. So here we are on the Thinkorswim platform taking a look at the yield curve. And what we also have on here is the Fed funds rate. Now, the Fed funds rate is going to be in purple. This is a really big part that I want people to understand. Everyone, is talking about Fed rate cuts, Fed rate cuts, Fed rate cuts. And when is the Fed going to cut rates? Well, rather than just guessing, guys, let's actually just take a look at what's happened in history. So we've got our 10-year, 2-year yield curve on here. And again, below that yellow line here, that's 0. That means it's inverted. So we can see it goes inverted here. And once we get above the yellow line here and we are not inverted anymore, the yield curve has steepened back above 0. Take a look at the purple line. It starts to go down. Remember, this is your Fed funds rate. So when this goes up, this means that the Fed is increasing rates, that we're seeing rate hikes. When this goes flat, this means that the Fed has paused, right? We can see this period here where the Fed is raising rates. We see this period here where the Fed has paused. And then we see this period here where the Fed is cutting rates. Same thing over here. We see this rapid acceleration, right? This is the Fed doing its, most rapid acceleration of Fed funds rate. And then now we've officially paused. And everyone keeps trying to time perfectly when rate cuts are going to happen. But if we look, it's very simple to see that it happens when the yield curve is uninverted. So that's all we really have to wait for, right? Once the yield curve is uninverted, we see shortly after the Fed starts to cut rates. Yield curve gets uninverted, shortly after, Fed starts to cut rates. Now let's go back to our current, scenario that we have right now and take a look. And what are we seeing, guys? Well, we're seeing that the Fed is flat right here. The Fed fund rate is flat. That means that they have paused. And the yield curve is actually declining right now, right? It's not going up. If this was above zero, then based on history, that is a reasonable time to assume that the Fed is about to start cutting rates. Now, what can we find out about how the yield curve is going to impact stock market prices? If we were to zoom in here, okay, and take a look, remember, this is our yield curve right here, and this is the stock market. This is the S&P 500. Let's draw some vertical lines here for a second, okay? So let's take a look right here, and what do we see? Well, we see when the yield curve started to go back down and invert more and get more inverted, stocks actually rallied, okay? And it's not so much of a coincidence. Take a look here, and we can see when the yield curve was actually starting to rise, right, and the yield curve starts to steepen, we see that stocks are pulling back. And then we have this period here where the yield curve is, declining, right? We see the yield curve going down, and what do we see? We see stocks going up. So that is the impact that the yield curve currently at this time has in relation to the stock market. So, if we're seeing the yield curve continue to go down, it's very likely that the stocks are going to continue to rise. Okay, it's just that simple. Now, that correlation doesn't last forever, and it's not always going to last forever. The big correlation that we need to pay attention to the most is what happens when the yield curve is uninverted, right? When we see those Fed rate cuts. Remember, the Fed typically only cuts rates when something is broken, right? Now, a lot of people assume that the Fed was going to cut rates or that something broke when we had that 3-day banking crisis, right? You guys remember that, how crazy that was for a whole 3 days, right? Then afterwards, everything was fine. The Fed came in and injected liquidity and bailed them out essentially. Now, using these vertical lines, remember, we see the yield curve is no longer inverted. It's above zero. What happens to stocks? What happens to the stock market? Well, we see the stock market goes on a very, very dramatic drop, right? We see a huge decline in stock market prices as the yield curve uninverts and as the Fed funds rate drops. Same thing over here, right? If we were to zoom in on this time period, what do we see? Well, we see the yield curve starts to get uninverted over here. We see the Fed starts to cut rates very shortly after. And what happens? The stock market goes on a very dramatic drop again, right? We enter bear markets in both of those scenarios. So, people know that, right? People know that. Economists know that. Stock market analysts know that. And they know that, hey, when the yield curve uninverts, that could cause a recession. And historically, that could lead to stocks dropping and having a sharp sell-off. So using that, now we can take a look at the current, relationship between the stock market and yield curves and see how the yield curve going down has resulted in stocks going up. But then once the yield curve starts to go up, remember, once the yield curve starts to rise, that's actually once we've seen some sell-offs in the stock market, right? And now we understand why, because we understand once the yield curve gets uninverted and gets above zero, that historically we've seen sharp sell-offs in the stock market. So as it's pulled back down and as the yield curve has gotten more inverted here recently, we've seen the stock market continue to rally. Now, that's the 10-year, 2-year yield curve. What I wanted to show you guys, if you're not familiar or you didn't realize that Thinkorswim actually has the yield curve on there, is if you come over here to the Analyze tool, you can actually get the yield curves, right? This is the 10-year, 2-year yield curve right here that we're looking at, okay? Now, it doesn't have as many features as the Charts tab, but it's still really amazing, right? You can come in here and it will show you guys all of the periods of recession, right? The recessions are going to be shaded in gray here, right? And so if you just see, once we get back above zero, we get into recessions, right? Every time we go back below zero and then get above, we see those recessions. But, if we were to just come to the Home tab, how could you find this, right, without knowing? Well, what you can do is you can click on the economic data and it'll take you to this page. And you see under money, banking, and finance, you just click on interest rates here, right? And then from there, we want to go to interest rate spreads because we're looking at the spread between the 10-year and the 2-year. Okay, now we've already gone over the 10-year and the 2-year. Why don't we go ahead and take a look at the 10-year 3-month yield curve, because that's another important one So we'll go ahead and click here and go over this one for you guys. And what you can do is you can simply copy, right? Hit Control C, and then go back to your charts tab and paste it in, right? And then hit enter. And now look at what we're looking at, guys. We're looking at the 10-year 3-month yield curve. Okay. And so, these are going to be the two most important yield curves that you want to pay attention to. Now, what you can do to save this is you can, hit Control C. You can save it into a watch list on Thinkorswim, maybe an economic data watch list, right? There's lots of great economic data available in Thinkorswim. Or what you can do is you can actually come in here to the flexible grid tab, which is where we're at right now. And you come here and you hit Save Flexible Grid. Now, I've already saved the 10-year, 2-year yield curve as a flexible grid. And so I don't want to save this one with the 10-year, 3-month as a flexible grid. But what I can actually do is just show you guys how I've already done this, right? And now we'll take a look at the 10-year, 3-month flexible grid that I have with the S&P 500. And what do we see again, guys? We can take a look in these time periods here. When the yield curve uninverts, the stock market sells off, right? Yield curve is uninverted here, and we see a stock market sell off afterwards. So that's what we really need to be cautious of, right? If we were to zoom in and take a look at, the present yield curve, again, we're seeing it go down and we're seeing stocks go up. When this gets back above zero and crosses above zero, that's a very big warning sign. Now, it's no guarantee. It does not mean that there's 100% guarantee that stocks are going to sell off and drop 30, 40, 50, 60%, but it's something that has happened in the past, right? And so being the fact that we can't predict the future, all we can use is historical data to help give us an edge, right, and properly prepare. All right. And then there's other factors that we will have to consider into, making decisions. But this is a really important one, in my opinion, that people do want to keep in mind and do want to factor into their decisions once it happens, right? And remember, this is also most likely going to be the signal of when the Fed is actually going to cut rates, is when we actually get the yield curve uninverted, right? When it is not inverted anymore. Now, hopefully you all enjoyed this video. If you did, you're really going to enjoy that newsletter. So sign up for that. Remember, it's completely free, valuable content. You can get that directly to your inbox every single week. And if you want access to all of the different resources, all of the different chart layouts that I have, just like this one, right, and many other things such as custom scripts, indicators, being able to access gamma levels, dark pool levels, many different things, join the Discord. It's only $1 right now. That promo code JAN24 is going to expire at the end of January. So you've got to get in now to be able to get in for just $1. Remember, it's only $1. So you can sign up for the Discord for $1. You can join the newsletter for free. Either way, I think you will be happy with the value that I'm trying to provide. Thanks again for watching. Smash the like button and subscribe for more.